Hey, what's going on, guys? Thanks for tuning back in. And if you're new, make sure you hit the subscribe button so that way you can check out weekly posts on personal wealth management and market headlines. My name is Ash, certified financial planner, bringing you the knowledge, perspective, and resources from my world to help empower you to live a better financial life. So these market insight videos are intended to give you all a high-level overview of the current economic landscape and other major headlines affecting financial markets. So today, I'm going to be discussing three major themes that are affecting the markets and headlines, and that is the current state of the economy, the election, and the difference between the stock market and the economy. You're probably wondering, hey Ash, I don't have time for all that. It doesn't really apply to me. Hey, you know what, Scott? You're right, bro. Unless you're in this field, why should you give a shit? Everybody's too busy with the wife, the kids, playing Call of Duty. But it is important to understand what is happening in the world, not just to be an informed citizen, but an informed investor. Some of the most successful clients that I've worked with have always kept a pulse on macroeconomic news, political races, tax law changes, etc. And for the right reason, because those events can potentially impact the decisions that they make regarding their personal finances. For example, I recently spoke with a client who earlier this year had a target date to buy a home in the next 3 to 5 years or so. As a result of recent events with the Federal Reserve lowering interest rates to record lows and the housing market softening up in some areas, his target plan changed to 12 to 18 months, more than cut his time frame in half. So with these market insight videos, I want to be able to highlight key events and news, but more importantly, interpret them for you. So you can be informed of what's happening in the world and how you can strategize from a financial standpoint to carry out your objectives. So temperature check. There's a lot of crazy shit happening in the world, from the global pandemic to social unrest. Oh, and if you didn't know, we're actually in a recession. By definition, a recession is 2 consecutive quarters of negative GDP growth. GDP stands for gross domestic product. If you forgot what that means because you slept through econ class all semester, don't worry, I got you. GDP is the total of all goods and services bought and sold here in the US. Conventionally, when we look at historical data going back about 100 years, a recession only lasts on average anywhere between 10 to 15 months. So don't worry too much. My assumption is that in the next 6 to 8 months, we'll be on a slight uptrend as major economies around the world recover from the pandemic and also digest the outcome of the US election. Speaking of election, what the f is going on? That first debate looked like some shit off of SNL. No lie.
Did you use the word smart?
Will you shut up, man?
But anyways, not here to talk politics, but the election is important for financial markets and the economy as many analysts formulate projections on potential outcomes. For example, a Trump victory would certainly be advantageous for the stock market as pro-business agendas and tax plans would carry over for the next 4 years. However, a Biden victory would focus more on spending, on agendas like infrastructure, sustainable energy, raising the minimum wage, and also raising the corporate tax rate from 21 to 28%. So in a nutshell, tax cuts versus tax hikes. In addition to taxes, it's also important to understand the high-level political agenda either party is looking to drive. Ask yourself, are they pushing agendas that could potentially impact your business or your industry? For example, being that I'm in the finance industry, there have been a multitude of political agendas pushed through to add additional regulation to advisors in the industry and the companies for which they work for. Same with technology, especially big tech, like the Apples, the Microsoft, the Googles, and Amazons of the world. Whether you're an employee or a stockholder for some of these companies, the recent privacy concerns and probe by lawmakers on their business practices can potentially result in these large conglomerates to break up their company. So in a nutshell, understanding political agendas as an investor is so much different than being clear-cut pro-left or pro-right. It really comes down to, how will this candidate help or hurt me? What should I prepare for based on the goals and the assets that I have? What should I be thinking about? So to sum it up, I think it's important to look beyond media-built perceptions and really understand the agendas that both parties are looking to drive and how they can impact the macro and the micro economy. In other words, the world's around you, and ultimately, how can you prepare for it? So as we get closer to the election, I'll be keeping closer tabs on the debates, the polls, and the vibrations that are felt through the markets. Speaking of markets, what the f is going on with the stock market? We're up a lot one day, we're down a shit ton the next. And if you've seen the past 3 to 6 month performance, the stock market has been choppy, but has managed somehow to pull off some record gains. For context, since the pandemic was declared back in March and we lost over 30% in the S&P 500 index, most companies have regained their losses and then some. Just listen to some of these returns. The S&P 500 index up 42%, NASDAQ index up 57%, Microsoft up 48%, Facebook 65%, and the list literally just goes on. You're probably wondering, hey Ash, like how is this possible? You just said that we were in a recession. This doesn't make any sense. Well, when it comes to finance, dollars don't always make sense. They just make more dollars. That was stupid. Hey, I should That was stupid. But no, in reality, when it comes to analyzing this conundrum, it breaks down to two parts: the economy and the stock market. They are two different entities. And although the performance of either can reflect onto the other, they are totally 100% independent. Starting with the stock market, even though we are in a recession, it is important to understand that the stock market is forward looking, meaning that the current price of a stock or levels of an index are looking beyond current conditions. So currently, the stock market is looking beyond the fact that we are in a recession, beyond the fact that unemployment was peaking and that we are currently in a pandemic. I like to think of the stock market as that one over-emotional ex-girlfriend that started talking about kids and marriage like 2 weeks after your first date. And the key word there is emotional. Because just like her, the markets are very, very sensitive to either positive or negative information. You'll remember just how happy she got over the words, "Hey babe, I'm gonna take you to brunch tomorrow," or how toxic her mood swings were when you try to hang out with your boys. So being that we are in a recession, any additional negative news can add great amounts of volatility to the stock market. On the flip side though, any positive news can add great potential gains. And lastly, there are many things that contribute to stock market volatility, like corporate earnings and forecasts, trade policies, political pressures, and other just random headlines. So underlying economic conditions is just one of the many. Next, let's talk about the economy. The performance of the economy is measured by a number of different factors, but it's broken down into two categories: leading and lagging indicators. I'm going to break these economic indicators down further in detail in a separate video, but for the sake of this conversation, both leading and lagging indicators are basically a bunch of data that help economists and analysts predict where the economy is, where it was, and where it is headed. And that data ranges from inventory levels to unemployment, inflation, manufacturing activity, etc. And this data, when it's released, can potentially affect our over-emotional ex-girlfriend, the stock market. So for example, when unemployment numbers are getting better month over month, the stock market may react positively, as this is a sign of recovery. So in a nutshell, the stock market does not always reflect the current state of the economy. It is just one of the many common indicators that analysts and economists utilize to temperature check the economy. Whew. We covered a lot of shit. Whew. Hopefully that gave you a really good overview of what's trending in the economy and financial markets and my perspectives around them. I appreciate you guys tapping in, and please be sure to comment, like, subscribe. I look forward to growing our community here at Money and Power, where our objective is to empower viewers with the knowledge, resources, and perspective to help them live a better financial life. I'll catch you guys next time.